The Federal Reserve just crashed the damn market. What's it mean for the stock markets? What's it mean for Bitcoin? What's it mean for Ethereum? What the heck did they actually say? Well, in today's video, I want to cover all of that for you. My name's Lark. I make videos on investing. If you do like that topic, make sure to subscribe to the channel. Leave a thumbs up if you do enjoy this kind of content. Now let's go ahead and get into it. So the news is in. The Federal Reserve is raising interest rates again by 0.75% or 75 basis points. The market had largely anticipated this to happen. Jerome Powell came out and said the chances of a soft landing are likely to diminish, which if we translate that means that more pain is coming. Basically, Powell has reaffirmed much of what he's already been saying by coming out and saying we're committed to getting inflation back down to 2%. We're ready to do this for as long as it takes. We're going to keep raising interest rates until we see it happen. And the reality of that is that stocks are likely to suffer during this situation. Crypto is likely to suffer during this situation. That's all going to lead to property prices likely coming down, potentially unemployment going up. It's crazy stuff, but that's exactly what is going on now. Thankfully, we didn't get that 100 basis point or 1% increase to the interest rates. That would have definitely had a much more negative reaction to the markets, but the markets have reacted negatively enough already. We can look here at the S&P 500, which is going down today. It's going down. Have a zoom in on the 1 day here. You can see we got rejected right here. Pretty strong rejection at this area of price resistance. Down we started going on the news from the Federal Reserve. Investors didn't like that. Jerome is saying that, yeah, there's basically more pain coming. A soft landing is not a most likely scenario anymore. Now, the next major area of support here for the S&P 500 is down at 3640. We do have increasing numbers of voices calling for a much deeper coming correction for the S&P 500, potentially all the way down to 3200, which would line up with the areas of price support from back here in late 2020. Or even as far down as 3,000, a nice big fat round number, and also, of course, key areas of price support and previous price resistance from both 2020 and 2019. So we'll see if those bearish calls play out, and that's, some legendary investors who are calling for such a correction still to come in for the stock markets. Now, why do we mention that? Because if the stock markets go down by that much, that is bad news bears for your cryptocurrency assets, without a doubt. And of course, we are seeing the dollar continue to rally. This is the dollar index, went up to another 20-year high on the back of the announcement from the Fed, actually up to 111.8. Massive rally here for the dollar. Dollar just not cooling down at all. The best we've had is these pullbacks to the 50-day exponential moving average. That is a solid damn uptrend that the dollar index is in right now. We've had retests to the 50-day EMA, but that's about it. Otherwise, it just keeps trucking higher. We've not had any serious forms of invalidation yet on the dollar index, and until we have that, I don't think we can expect the risk appetite to strongly come back into the market and for Bitcoin, Ethereum, crypto assets, tech stocks, all that stuff to really start pumping again. Now, before we get into the charts for Bitcoin and Ethereum, if you don't have yourself an account over on Bybit yet, you need to get yourself one. It's the best place for longing and shorting Bitcoin, Ethereum, all the top altcoins. They have 0% trading fees on their spot markets, 0% fees for market makers on their futures markets, and if you use the link down below in the description, you get up to $4,450 in exclusive deposit bonuses by using that link. So check it out if you are a trader. Now, one thought before we look at these charts here. The market was expecting this 0.75% rate hike. We knew it was coming. Much of what Jerome Powell has just said is basically more of the same. Well, maybe people are getting a little freaked out about his, the odds of a soft landing are diminishing. He's already switched over to saying a softish landing was coming. And of course, everybody realistically knew, the impact of these continued rate hikes and that there is that real potential for a hard landing, or at least a hardish landing, if you will. But my thought now is I wonder if now that this has come out, we've had the initial pulling off the Band-Aid moment, everyone kind of freaks out in the markets dip a little bit. But I wonder if now that moment is finished, if everyone can kind of chill out for a little bit, so to speak, and we actually muster up a bit of a rally between now and when the CPI data is released in October, which, depending on how that CPI data goes, could, of course, tank markets more or provide a bit of a bullish, end of the year rally, for example, if we do get a significant reduction on inflation in October. So we'll keep an eye on that, obviously, but it will be interesting to see if we did get such a rally forming up. Now let's take a look here at Bitcoin. Bitcoin, what a wild day. What a wild day. It's just crazy candles right here. This candle on the 19th where we just had huge buy pressure stepping up, huge rejection here at this area of price resistance, blasted all the way back down to $18,184. After, of course, just today, we saw on this Federal Reserve meeting so much volatility in the market, price going up to $19,800 before coming back down over $1,500 downwards. Now, currently, we are struggling to close a candle here above this area of price support at $18,500. Now, if we can close a daily candle above there, maybe we can start grinding our way back up to retesting some of these areas of price resistance here at 19,500 and 20,500, et cetera, et cetera. But right now, we are only about 5% away from a new yearly low. And actually, this candle close right here, that's the lowest daily candle close of the year. That's crazy stuff right there. And yeah, we've had a lower wick down here back on June 18th, but this is the lowest daily candle close. So it is definitely bearish out there, guys. And we do have this potential for the markets to go even lower. We still may not have seen the low for 2022 with so much bad macroeconomic data coming in, with the Federal Reserve intent on crushing the stock markets in order to cool things down. We still could see lower price points coming in. Now, like as I said, 5% away from this year's lows. The next major areas of price support start coming in way down lower. So of course, next big one's at $16,000. Then we've got next price support, of course, around probably $12,500 be the big one I'd say that everybody's going to be keeping an eye out for if we were to go into such a bearish zone. And of course, with major analysts calling for a 25% correction still to come for stock markets, those numbers should not be put off the table for crypto either. But maybe we get a little bounce here. That would be nice. Close this back above support. Maybe we get a nice little rally for the next 2 weeks, for example. We'll see how that plays out or not. We can see here Ethereum not looking super hot either. We actually closed the daily candle here for Ethereum below this key area of price support at $1,280. Now, I'm going to be curious to see if that's just a quick blip blow. We pop back up very soon, because if we don't pop back up, oh boy. Look, I would watch out right now for this daily candle to retest the area of price resistance here and for a potential rejection to happen there. So unless we actually close this daily candle back up above here, then I think we start looking at the potential for the price of Ethereum to come all the way down potentially to the next major area of price support around $1,000. So if we get a rejection on that daily candle at resistance, keep an eye out down here, because there's not a lot of price support between here and there. So that's something to keep in mind. Again, maybe we do get that rally coming in. Maybe everyone goes, hey, we have a 2-week window to get markets pumping up. Everyone get excited again. And we do a little rally. And maybe we get up to the 50-day exponential moving average again, or the 100-day exponential moving average again, for example. But I still think Ethereum in particular is in this post-merge world where everybody's like, yay, the merge is very, very exciting. But now we have to deal with reality that all those bullish catalysts for Ethereum aren't going to happen overnight. Anyway, just my 2 Satoshis as always. Let me know what you think down below. Are markets going to have a bit of a mini rally as we wait for the inflation data to come in? Everyone has a chance to breathe. Big drama's over for the moment. Or that's some big drama and we are going to have prices coming down for stocks and for crypto. Let me know down below in the comment section. Thanks so much for watching today's video, and peace out till next time.